Good afternoon. Welcome to the weekly Livestock Market Update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Happy Friday, Megan.
A happy Friday. Interesting Friday. We are going to talk quarterly hogs and pigs today. We're going to talk some restaurant performance. We're also going to talk about the June acreage number, which both that hogs and pigs report and June acreage number had a little bit of surprise in there. So plenty for us to dig into coming up. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week live fed cattle were down about $2.25. We saw feeder cattle markets 5 to 10 higher this week. On the futures side, we saw the August live cattle futures contract close up $6 and the August feeder cattle contract up 13. Now, part of that was as July corn futures fell a little more than 73 cents this week. On the beef side, the choice box beef price fell $6.75. Ribs and loins were lower this week, kind of leading that way down. On the hog side, barrels and gilts this week were $2 higher. The July lean hog futures contract was also up this week, nearly $3.60. We also got a stronger pork cutout value. It was up $4.70. Strength across the board in all those pork components this week.
It was really interesting looking at the cash hog market while we were up, really not as much business as we've been seeing recently. I would say a little lackluster as you get into it. Was a lot of that just kind of evaluating maybe the Prop 12 implementation, which technically starts tomorrow, but then also thinking about that quarterly hogs and pigs report that came out yesterday?
So probably a little bit of that was going on. I'll also say we're getting ready to head into the 4th of July holiday weekend, and I think that played into some of the lack of market moves. I think some folks might have actually decided to really stretch us into a long weekend, given that the 4th falls on a Tuesday.
That is definitely a very long holiday weekend. May as well take advantage of it though, right? If you can.
That's right. If you have the opportunity, I'll take 4 days off sometime. That's right. Or 5.
Or 6 or so, whatever.
Yeah,
all
exactly.
Right. Let's take a look at slaughter numbers as we look for both cattle and hogs this week.
Yeah, start on the cattle side. USDA saying for the week ending July 1st, run on 644,000 head of cattle. That's down 5,000 head from where we ran last week, but is up 3,000 head relative to a year ago. Again, don't forget July 4th holiday here. On the hog side, a run of 2.332 million head of hogs this week. That's 40,000 head less than last week, but 48,000 more than where we were a year ago.
When we're looking year over year, how are those comparing?
Yeah, so year-to-date cattle slaughters running 3.4% below a year ago, while that hog slaughter is running 1.2% above a year ago.
All right, let's start quarterly hogs and pigs report. And I'm going to preface this by saying, literally going into the report, I was saying expectations are that we're going to see a decline in the breeding herd. We may see some contractions. There may be some shorter supplies, tighter supplies coming in the last half of 2023. And myself, like everybody else, not correct.
It's funny you say that. I told someone before the report we were going to see some big surprises, and they asked me back the question of what did I think the big surprises were going to be, and I said a bigger cut in breeding inventory than anybody thought. Well, little did I know, right? So breeding inventory according to USDA 99.6% of a year ago on June 1st of this year. So not a big cut, but down. Lots of interesting things. You know, we had a lot of conversation about what was happening to the Missouri sow inventory as some of the large integrated firms were talking about getting rid of sows. Yet Missouri was up in breeding inventory June 1 of this year relative to a year ago. Pigs per litter jumped out at me. We came in at 103.3% of a year ago, according to USDA, which was well outside the pre-report estimate. Seems like we are suggesting maybe some recovery from PRRS, but anecdotally, I heard a lot of PRRS stories still going on across many parts of the country. So that jumps out at me as a lot more pigs. Now, you want to be optimistic, you just look at farrowing intention. So even though breeding inventory wasn't down a whole lot. Breeding intentions, June through August, 96.1 of a year ago. Sep through Nov, 95.5% of a year ago. But both of those maybe fall in line with more of what I would have expected in terms of cuts. That holds true. Early 2024 pork supplies maybe are less than we would have thought pre-report. So maybe that's the positive news we'll take out of hogs and pigs.
And as I ask my questions, I also want to preface this by saying nobody wants to be the person nobody is questioning what USDA is doing or the work that is being done in these surveys. But you have to wonder, are there going to be revisions coming forward? And what does that mean then ultimately when we're thinking about markets and marketability and profitability in the pork industry?
Yeah, I wish I had a crystal ball to answer those revisions questions. We could get some. It's hard to say. And again, I'm not trying to be critical of USDA and what they've done. I don't want that job. But by the way, I think as the number of operations dwindle and they get bigger, I think it gets harder to do surveys that capture all of the potential changes going on. And again, that's not me being critical. I can't tell USDA, well, you shouldn't have done it this way. You should have done it a different way and you've gotten better information. I just say it's harder than it used to be. But when the anecdotal information doesn't match up very well with what we get out of the report, then that I think starts us down this road of, do they miss something? Do they have it wrong? What kind of revisions will we see? We got revisions relative to Sal's Farrow set through Nov of 2022, up those, a little more pig crop, changed some December 1 market hog inventories as well. So we did see revisions even in this report and some of that old data.
Does a report like this, where there's kind of just very somewhat surprising information, make it difficult for producers to think about profitability management, risk management, those types of steps, especially paired with the June acreage report, which we're going to talk about here shortly?
So maybe. All right. So I'm going to give USDA a little bit of sunshine here with the following. So I've kept saying the supply side of these different ag industries are less responsive to price than they used to be. Well, this hogs and pigs report, I think, is part of that indication, right? So we all might have thought a bigger cut in breeding inventory than what we got out of the report. Just reminds me that as these industries continue to consolidate and tend to have larger operations, getting that industry to adjust, especially downward to lack of profitability, is really hard. Everybody's got similar cost of production, and so they're trying to survive until prices can recover. So this may not go away anytime soon. We can say it's bad data, but in fact, USDA may have hit the nail on the head. Only time will tell when we ultimately see how many hogs in the market out of a given breeding inventory.
So let's talk about this compared and bring in the June acreage number, because I think there's a lot of figures that stand out to me, right? You could look at wheat acreage and look at abandonment potential there. You can look at the corn acreage number, which we'll talk about. But the one I think that's the most shocking and the market reacted to today was that soybean number.
Yes. So USDA told us in today's report, 83.5 million acres of soybeans planted, a significant decline from planting intentions in March, 5% below acreage relative to last year. That certainly made soybean prices move higher. At the same time, USDA told us 94.1 million acres of corn planted, which was up from the 91.9 of planting intentions. So we certainly got not what we anticipated. Iowa, Illinois, Missouri, to an extent, all planted more corn than I think I would have anticipated. And those same states are the ones where we lost some soybeans as well. We'll wait and see till we get to the finish line here. USDA can still make adjustments to those numbers as we go through time, but markets certainly moved. And so again, I say do risk management before these market reports when you can, to try to avoid these outcomes. Now, if I had perfect foresight, I would tell folks which way they should have been, but the focus should be on when can I lock in some reasonable profitability and take some risk off the table. I think that still needs to be the focus.
Knowing what we're seeing weather-wise, obviously, the weather system that moved through and caused damage to crops. Granted, we're still fairly early, but there are issues with this corn crop as well. Knowing that soybean prices or soybean crops could be short, let's talk risk management in terms of profitability for the livestock side of things, or mitigating risk on both cattle and hogs, because you've got concerns about input prices and feed costs moving forward. And I think those are going to be evident for the rest of the year.
Yeah, so certainly on the protein side of the equation, given soybean meal prices took off as well today with what we got in the acreage report, thinking about opportunities to lock in some lower price soybean meal. I think we're still going to find days where markets move lower for corn and soybeans, and days where markets move higher. Taking advantage of those times when we're down might be helpful. I'm kind of waiting to see what Brazil does in response to some of these higher soybean prices that we see as well. I'm kind of curious about plantings for them next round. And so they're, we may set in motion them trying to get a lot of acres of soybeans in the ground. So there may not be a lot of opportunities until then, but let's make sure we take care of those and just keep reminding ourselves more volatility in these prices as we look ahead. And hogs in particular, I mean, this is all about trying to find ways to get any black ink if at all possible. And in these markets, that's tough to do. But if we get close to that, again, getting that risk of higher feed costs or lower hog prices out of the equation may be the long-term best strategy. I always say you're not hitting home runs, but singles and doubles are better than striking out trying to hit that home run.
I would have to assume as well, thinking about higher soybean meal, higher soybean prices in general, while hog prices are at the levels they are, profitability is not. And we're not going to see any significant expansion in the hog herd until that improves.
Yeah, we've certainly stalled out in kind of growth. Now, I think the question is, what kind of productivity gains do we continue to see? And if we're going to see similar productivity gains as the pigs per litter number we got out of the last report, even with flat breeding inventory, that ends up with couple percent growth in pork supplies as we look ahead. So even flat can be problematic, but those are some of the things that I think producers have to work through in terms of what do I need to do on my operation to address the risk that I face today.
Scott, we're going to finish up today and talk a little restaurant performance index. And I was really hoping maybe we would end on a high note today, but we're not going to.
Yep, that's correct. So for the first month this year, we actually saw that restaurant performance index below 100, which 100 below 100 is contraction, above 100 is expansion. So first time we're below 100. So talking about contraction, for me, the one that's jumped out for the last 2 months has been the current situation customer traffic number. April was 96.6 and May is now 96.5. So less customer traffic coming in those restaurants, that ought to give us some indication of what's going on. Expectations as well, and to me, that's more about expected business conditions. That's what's really been dragging down the expectations component. May was 95.8 in terms of that business conditions portion of expectations, and that's what drug down overall expectations. So hopefully we get some recovery here, but after we kind of started this year at a 102.8 index, now being to 99.6 isn't as much fun.
Definitely not. All right. That's it for us this week. As we look ahead to next week, We're going to talk trade and jobs report. What are you specifically looking at on that monthly trade data?
So I still say, just what kind of recovery are we getting? We've talked a lot about ports maybe being more open and giving us an opportunity to move more product. Do we see anything out of that trade data? It may be too early for that to really happen. Beef in particular has kind of been slow this year as we look at some of the countries that have not picked up, including China. And then on the job side, we've seen some pretty good general economic indicators here as we've gone through this week. Do we see a lot of jobs coming or not? And that creates a whole confusing then conversation about if the economy grows too fast, then we have inflation issues, means the Fed raises interest rates. So that's a very complicated story to unpack, but we'll just stay focused on job creation means more demand for meat products at the end of the day.
And we may dig into that, how the economy grows and inflation and jobs and how that all works, because I think it's a really interesting conversation to unpack and to kind of understand from our position in our industry on the demand side where that comes in.
I will try to have some answers for you.
I'm giving you fair warning.
I wish I could be ready for sure.
Scott, it's always great to see you. We look forward to talking to you next Friday. Be safe with your fireworks this weekend.
Likewise.
Always. Safety first, especially with 5-year-olds and trying to you can hold a sparkler. That's what you get.
Let's not create any fires out there. I didn't purchase any fireworks just because it's so dry here in central Missouri.
It is definitely probably a safety hazard for fireworks in your part of the country. Have a great weekend. We'll talk to you next Friday.
Sounds good.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happened every day on the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner from Brownfield.